There is a moment in every trader's life when the charts blur, the strategies collapse, and the confidence that once fueled bold decisions evaporates into thin air. That moment is the breaking point. The kind of moment when you sit in front of your screen staring at red after red, not even reacting anymore. At first, every loss stings like a cut. But as the streak grows longer, the cuts turn numb, as though your body has run out of pain receptors to send the warning signal. You are no longer fighting the market, you are fighting yourself. This breaking point is not reserved for beginners. In fact, the most experienced traders, the ones who have studied every book, analyzed every candlestick, built every back-tested strategy, eventually meet this wall too. Why? Because the market is not just a puzzle to be solved, it is a mirror, and what it reflects back is not only your technical skill but also your mental resilience. Picture this. You've had a good run for weeks. Your account balance is climbing. You're following your plan with precision. The trades are crisp, and your confidence feels unshakable. Then, one morning, the setup you've trusted countless times betrays you. You tell yourself it's fine, it happens. But the next trade collapses too. And the next. Suddenly, you are down 5 trades in a row, 10 trades in a row. Your stop losses hit with surgical accuracy, as if the market itself is mocking you. The human brain is not designed for streaks of pain. It interprets patterns as fate. When you win repeatedly, your brain convinces you that you've cracked the code, that the streak will last forever. When you lose repeatedly, that same brain tells you the opposite. That maybe you've lost your edge. That maybe you were never skilled in the first place. That maybe the dream of trading freedom was nothing but a mirage. Both illusions are dangerous, but the illusion of hopelessness is the one that ruins careers. At the breaking point, some traders do the unthinkable. They abandon their rules. They throw money at random trades, hoping for a miracle rebound. They double their lot size, driven not by logic but by desperation. They transform from calculated professionals into gamblers chasing luck at the casino. And almost every time, the result is devastation. Accounts are blown, years of effort erased in hours. And yet, underneath that chaos lies something most traders never realize. The breaking point is not the end, it is the invitation to transform. There's a story about a trader who had a system that worked beautifully in backtesting. Months of green trades gave him confidence that this was the path to his freedom. He began live trading with strict rules. Risk 1% per trade, never chase, never deviate. But then, the market changed its rhythm. What used to work now produced nothing but red. After 7 losing trades, he lost faith in his own creation. Instead of stepping back, he increased his risk to 5%, convinced he was due for a rebound. The rebound never came. Within 2 weeks, his account was destroyed. He walked away from trading in shame, believing the dream was impossible. But what he never understood was that his downfall wasn't caused by the market. It was caused by his inability to reset when the streak began. He allowed the spiral to define him instead of interrupting it. That's the essence of the mental reset. A losing streak doesn't mean you are doomed. It doesn't mean you've lost your skill. It means your system and your psychology are out of alignment, and instead of forcing the world to bend to your will, you must pause and recalibrate. The most dangerous thing is not the losing streak itself, but your response to it. The breaking point is terrifying because it feels like standing at the edge of a cliff. You look down and see the abyss of financial ruin, wasted time, and shattered confidence. But what most traders forget is that the cliff is not real. It is an illusion created by fear. The truth is, the market does not care about your streak, good or bad. It has no memory. It will offer you another opportunity tomorrow, and the day after, and every day after that. The only memory that exists is the one you create in your own mind, replaying the pain until you turn it into your reality. Imagine a boxer who enters the ring, takes a series of heavy hits in the first round, and begins to doubt his own strength. If he convinces himself he's weak, the fight is over before the bell rings again. But if he understands that those hits were not proof of weakness, just part of the game, then he can adjust his guard, change his strategy, and fight back stronger. A losing streak is just that, the first round. What determines the outcome is not the blows you take, but whether you have the resilience to stand back up. Before we dive deeper, let me ask you this. Are you struggling with fear, doubt, or overtrading? The truth is, Most traders don't fail because of bad strategies. They fail because of bad psychology. That's why I created my ebook, Master Your Mind, Master Your Trades. It's packed with practical steps to control your emotions, stay disciplined, and trade like a pro. If you're ready to take your trading to the next level, check the link in the description and pinned comment, and grab your copy today. Now let's continue. Here's the cruel irony. Sometimes the worst losing streaks come after the biggest winning streaks. Success builds confidence, but confidence unchecked breeds recklessness. You start cutting corners. You take setups you wouldn't normally take. You risk more than you should. And when the inevitable correction comes, you're unprepared. The fall from the high is brutal. It's not just about money, it's about identity. You believed you were untouchable, and now you feel exposed as fragile. This whiplash between euphoria and despair is what breaks most traders, because they were never prepared for the mental reset in the first place. The first step is to admit something most traders resist. You are not in control of the market. You never were. You are only in control of yourself, your rules, your emotions, your patience. When you cling to the illusion of control, every losing streak feels like a personal betrayal, like the universe is conspiring against you. But when you release that illusion, when you accept that losing streaks are part of the fabric of trading, you stop panicking and start preparing. You realize that the mental reset is not a sign of weakness but of maturity. Think back to the moments in your life outside trading where you faced streaks of setbacks. Maybe it was exams where you failed more than once, relationships that crumbled one after another, jobs that rejected you repeatedly. At the time, it felt unbearable. But looking back, you see the thread. Those streaks didn't define you, they refined you. Trading is no different. A losing streak is not the end of the story. It is the forge where discipline is hammered into something unshakable. There's a saying in aviation, planes are safest not when the skies are calm, but when the systems are prepared for turbulence. The pilots don't panic at the first sign of shaking. They don't abandon the cockpit. They trust their training, they trust the instruments, and they steady the course. Traders must think the same way. Turbulence is inevitable. A losing streak is turbulence. It is not the signal to eject. It is the signal to trust your discipline and reset. The breaking point feels final, but it isn't. It is the threshold. On one side is the trader you've always been, the one who reacts emotionally, chases losses, and crumbles under pressure. On the other side is the trader you could become, the one who stays composed, who knows when to step back, who uses losing streaks not as scars but as data. Which side you step into depends on your willingness to reset. So here's the truth most traders never hear. The mental reset is not optional. If you trade long enough, the streaks will come. The breaking points will come. The real question is whether you'll recognize them as the invitation they are. Because the trader who masters the reset doesn't just survive streaks, they transform them into the foundation of long-term success. And maybe that's why the greatest traders in history are not remembered for their winning streaks. They're remembered for how they handled their losing streaks. They didn't collapse. They didn't chase. They didn't abandon their discipline. They stepped back, they reset, and they returned sharper. That's the path forward. That's the path every trader must take if they want to last in this game. The breaking point isn't the end of your journey. It's the moment your real journey begins. A losing streak rarely begins with disaster. It usually starts with one small slip, a single trade that doesn't go the way you expected. At first, it seems harmless. You shrug it off, telling yourself it's just part of the game. But deep down, a subtle tension begins to build. Your brain whispers that something isn't right, that maybe you should make that loss back quickly. You don't act yet, but the seed of doubt is planted. The next day, another trade fails. Now the seed grows. The logical part of your mind reminds you that back-to-back losses are normal, but the emotional part begins stitching together a pattern. What if this continues? What if I'm slipping into a hole I can't climb out of? You don't say it out loud, but you feel it in your chest. By the third or fourth loss, the spiral begins. You no longer approach trades with the same calm precision as before. You enter with hesitation, or worse, with aggression. You either overthink every signal or you jump recklessly into setups you wouldn't normally touch. Both reactions are dangerous because both come from the same poisoned root: fear. fear of being wrong, fear of losing more, fear of watching your account shrink beyond repair. The spiral is not just about the money, it's about identity. Every trade feels like a vote on whether you're competent, whether you belong in this game, whether all the hours you've studied mean anything at all. Losing trades don't just take away capital, they chip away at who you think you are. And when your identity feels under attack, rational thought becomes almost impossible. It's like a gambler at the roulette table who has lost 5 spins in a row. He tells himself, it has to land on red next time, it's overdue. Logic is abandoned, replaced by superstition and desperation. Traders fall into the same trap. After a string of losses, you begin to believe you are owed a win, as if the market has a moral responsibility to balance the scales. That belief leads to oversized trades, irrational setups, and blind hope. The spiral tightens, pulling you further down. One of the cruelest tricks of the spiral is that it disguises itself as urgency. You tell yourself you need to act fast, that sitting still will only make it worse. You need to win now, today, on this next trade. But urgency is a lie. The market will still be there tomorrow, next week, next year. The only thing that won't be there if you keep spiraling is your account and your discipline. The spiral thrives on silence. Most traders suffer through it alone, hiding their losses like a shameful secret. They don't want to admit to themselves, much less to others, that they're unraveling. So they suffer in isolation, trapped in the echo chamber of their own thoughts, replaying every mistake until the mind itself becomes hostile territory. In that silence, the spiral deepens. But the truth is this: every trader has been there. Every legendary investor you admire has sat in front of their screen with sweat on their forehead and doubt in their heart, wondering if they've lost the touch. The difference between those who survive and those who vanish is not talent, it's the ability to break the spiral before it consumes them. There's a story about a trader named Mark. He started with discipline so strong it was almost robotic. His rules were simple: never risk more than 2%, only trade setups that matched his exact criteria, walk away after 2 losses in a day. For months, it worked. He was consistent, calm, and profitable. But then came a week where nothing aligned. He forced a trade, and it failed. Then another. His daily rule should have stopped him, but instead he told himself, just one more, I'll stop after this. The spiral had begun. By the end of the week, he had broken every one of his rules. He wasn't trading anymore. He was chasing. He blew nearly half his account before he realized what had happened. It wasn't the market that destroyed him. It was the spiral he built himself. The mind is a dangerous place when you're on a losing streak. It whispers lies that feel like truth. It tells you that one more trade will fix everything. It convinces you that doubling your risk is the smartest play. It tells you that walking away is weakness, that resetting means failure. These lies feel convincing in the moment, but they are the very fuel of the spiral. Breaking the spiral begins with awareness. You have to catch yourself in the act, to recognize the difference between trading your plan and trading your fear. It's the difference between entering a setup because it fits your system and entering a setup because you can't stand another loss. That awareness is hard to maintain because emotion clouds judgment, but it's the first step toward escape. The spiral is not inevitable, but it is seductive. Once you step onto its path, it pulls at you with gravity. Every loss feels heavier than the last, every decision more desperate. You look at your account not as capital but as a lifeline slipping away. You stop thinking about probability and start thinking about survival. And in that state, the very discipline that could save you feels like a cage. You want to break free, but the more you resist, the more you strangle yourself. It's important to remember that the spiral is not unique to trading. Athletes feel it when they miss shot after shot. Writers feel it when they hit a creative block, and every word looks wrong. Even surgeons, pilots, and soldiers experience it under pressure, the sense that one mistake leads to another, until the mind itself becomes your enemy. The spiral is a human condition. Trading just amplifies it because money is involved, and money is tied to survival, freedom, and pride. The key to breaking it is to step outside the game. That doesn't always mean quitting trading forever. Sometimes it just means walking away for a day, a week, even a month. It means creating distance between your emotions and your decisions, so you can return with clarity. Some traders fear stepping away, as if the market will move on without them, leaving them behind. But the market isn't going anywhere. It has been here for centuries and will remain for centuries more. What disappears when you refuse to reset is not opportunity but yourself. The spiral feeds on immediacy. It convinces you that the next trade is everything, that your entire future depends on recovering today. But once you zoom out, you realize how absurd that island. One losing week means nothing in a career that could span decades. 10 losses in a row mean nothing if you plan to take tens of thousands of trades over your lifetime. The spiral shrinks when you stretch your perspective. At the heart of the spiral is a fragile ego. We don't just want to win money, we want to be right. We want the market to confirm our intelligence, to reward our hours of study, to validate our identity. When the market does the opposite, our ego takes it personally. And the ego fights back, not with patience, but with aggression. It refuses to accept loss as part of the process. It demands revenge. That's why breaking the spiral is less about strategy and more about humility. You have to let go of being right. You have to accept that losing is not proof of failure but the price of admission to the game. The spiral ends when you stop feeding it. Every impulsive trade is fuel. Every desperate click is oxygen. The moment you choose not to place that irrational trade, the spiral weakens. The moment you step away, it begins to collapse. It doesn't disappear instantly, it lingers, tempting you back, but over time, discipline starves it until it dies. And when it does, you see the truth. The spiral was never the market's creation. It was always your own. The traders who last are not the ones who never spiral. They are the ones who learn to recognize it quickly and reset before it consumes them. They build habits, rituals, and safeguards to protect themselves. They know the signs, the sweaty palms, the racing heart, the urge to trade bigger after a loss, and they respond not with recklessness, but with restraint. They step away, they breathe, they wait, they reset. And so, the spiral, as terrifying as it is, becomes a teacher. It shows you the cracks in your discipline. It reveals the places where your ego still controls you. It exposes the illusions you cling to about control, about certainty, about identity. And if you're willing to learn from it, the spiral becomes the very thing that makes you stronger. A losing streak is not the enemy, the spiral island. And once you understand that, once you learn to starve it, you begin to see losing streaks differently, not as threats, but as tests. Not as punishment, but as practice. Each one is a chance to reset faster, to grow tougher, to sharpen the edge of your discipline until it cannot be dulled. The spiral feels endless when you're inside it, but it never island, it is a cycle you can break. The real question is whether you have the courage to pause, to breathe, to resist the temptation, and to step away. Because once you do, the spiral loses its power, and you regain yours. At some point, every trader who survives long enough faces a choice. Do I keep spiraling until there's nothing left? Or do I stop and reset? That moment is brutal because everything in you wants to keep going. Your pride wants to recover. Your fear wants to erase the losses. Your ego wants revenge. But beneath all that noise, there's a quieter voice. It says, stop, breathe, reset. Most ignore it. The ones who listen, those are the traders who eventually win. Resetting isn't glamorous. It doesn't look heroic. It looks like closing your laptop when you want nothing more than to click buy or sell. It looks like taking a walk when your brain screams at you to fight. It looks like turning down the volume on your ego and admitting the most painful truth in trading. Right now, you are not in control. That admission feels like weakness, but it is actually strength. Because only when you acknowledge you've lost control can you begin to take it back. A reset isn't just a pause, it's a purge. You're not only stepping away from the market, you're stepping away from the chaos in your mind. Every loss lingers in your memory, whispering doubts, replaying what-ifs. A reset clears that fog. It says, the past is gone. I don't owe it anything. I'm starting fresh. Without that reset, you keep trading with ghosts on your shoulder, and ghosts don't make good decisions. The reset starts with distance. Physical distance matters. Get up from the screen. Leave the room, touch the outside world, feel the air. The market pulls you into a bubble where charts are all that exist, where every candle feels like a personal attack. Breaking that bubble is essential. Walk away long enough to remind yourself that life exists beyond pips and percentages. The sun doesn't care about your losses. The wind doesn't care about your drawdown. The world keeps moving, and so should you. Mental distance is harder. Your brain wants to obsess, to keep replaying trades like a broken record. It clings to them, because the mind hates unfinished business. But trading is never finished. It's endless. So you must train yourself to let go. One exercise is simple. Write down the loss. Put it on paper. I lost this much because of this reason. Then close the notebook and walk away. You've acknowledged it, you've faced it, and now you're free to release it. Without that ritual, the loss stays in your head, circling endlessly like a predator waiting for the right moment to attack again. The hardest part of resetting is the guilt. You feel like you're abandoning the fight, like you're betraying the part of you that swore you'd win back what you lost. But here's the truth. You can't win back what's already gone. The money is gone, the trade is gone, the time is gone. Chasing it is like chasing smoke. It will only leave you more exhausted and more empty. The reset is not surrender. It is choosing to fight another day, on your terms, with a clear mind and sharp discipline. Think of it like a boxer. After taking hit after hit, he has two choices. He can swing wildly, hoping to land a miracle punch, or he can step back, cover up, and recover his stance. The first choice almost always ends in a knockout. The second keeps him alive long enough to find his rhythm again. Trading is no different. The reset is you putting your hands up, protecting yourself, and refusing to give the market the knockout it's begging for. There's a story of a trader named Anna. She was disciplined, methodical, and for years she managed to avoid disaster. Then came one month where everything went wrong, a dozen losing trades in a row. Her confidence shattered. She doubled her lot size on the 13th, thinking it had to turn. It didn't. Her account was bleeding, her nerves were wrecked, and her mind was screaming. But then she did something rare. She stopped. She shut down her platform, told herself, "I'm not ready to trade," and walked away for 3 weeks. During that time, she journaled, she exercised, she spent time with family. Slowly, the fog lifted. When she came back, she wasn't chasing anymore. She started small, rebuilt her rhythm, and within 6 months she was profitable again. That pause saved her career. Without it, she would have been another forgotten name in the trading graveyard. A reset doesn't always need weeks. Sometimes it's 1 day, sometimes 1 hour. The length doesn't matter, the intention does. You're not just resting, you're actively breaking the cycle. You're telling your brain, I refuse to trade in this state. I refuse to let desperation dictate my decisions. That statement alone changes everything, because it reminds you that you are not a slave to the market. You have agency. You can step away whenever you choose. Some traders resist resetting because they fear missing out. They think, what if I walk away and the perfect setup happens? But here's the secret. The perfect setup is useless if you're in the wrong mindset. Even if the market hands you gold, you'll fumble it if your head is clouded. Walking away never costs you as much as trading with a broken mind. And opportunities? They are infinite. Another setup will come. Another day will open. The only thing finite is your capital and your discipline. Protect those at all costs. Resetting is also about redefining what success means. Most traders measure success by profit and loss, but during a reset, success is measured differently. Success is closing your platform when you want to chase. Success is journaling instead of trading recklessly. Success is sitting in silence and facing the discomfort of loss without rushing to fix it. These are victories too. Invisible victories, but they matter because they rebuild the foundation you lost. You might think a reset is passive, but it's not. It's active recovery. Athletes know this. After brutal training, they rest, not because they're lazy, but because rest is part of growth. Muscles repair, energy restores, focus sharpens. Traders forget this. They think trading more is always the answer, but it isn't. Sometimes the most productive thing you can do for your trading is to stop trading. That's the paradox of the reset. Doing nothing becomes the most powerful action you can take. There's a deeper layer too. A reset isn't just about recovery, it's about recalibration. When you step back, You can see what you couldn't see inside the spiral. You notice the patterns of your mistakes. You realize that your losing streak wasn't just bad luck. It was poor execution, or broken rules, or emotional decision-making. In the fog of the moment, you couldn't see it. With distance, the truth becomes clear, and clarity is the soil where discipline grows again. The reset is the turning point in every trader's story. Those who resist it eventually vanish, accounts drained, spirits broken. Those who embrace it return stronger, sharper, more grounded. It is not weakness to step back. It is wisdom. It is the act of someone who understands that trading is not about this week or this month. It is about the long game. And in the long game, survival is victory. A losing streak feels like the end, but with a reset, it becomes the beginning of a new phase in your trading, where you are no longer enslaved by impulse, where you respect the power of the market without letting it control you, where you finally understand that discipline is not built by winning, but by recovering from loss. The reset is not just a strategy. It's a declaration. I will not be defined by this streak. I will not measure myself by temporary pain. I will not give up the future because of the present. The market can take my money for now, but it cannot take my discipline, my patience, or my will unless I hand them over. And I refuse to. In that moment, the spiral breaks, the noise quiets, the grip loosens, and for the first time in what feels like forever, you remember why you started trading in the first place. Not to chase, not to panic, not to spiral, but to master yourself. That is the reset. There comes a moment after the storm where silence feels louder than the thunder that preceded it. The charts aren't open, the phone is lying face down on the desk, and the trader is left staring at themselves in the reflection of the dark screen. This is not the silence of peace, but the silence of aftermath. Every losing streak leaves behind wreckage, some financial, some emotional, some psychological. And while most traders are eager to rush back into the markets to win it all back, the truth is that rebuilding is never about speed. It is about steady, deliberate steps that re-establish balance. Imagine a trader named Daniel. For weeks, he had been on a hot streak, stringing together wins, stacking profits, and feeling untouchable. But then came the reversal. First, a small loss that he brushed off. Then another, slightly larger. Soon, the market seemed to turn against him entirely. His entries were mistimed, his exits premature or too late, his confidence cracked. In less than 2 weeks, he had given back everything he earned, plus more. Now, Daniel sat in his chair, unable to move, staring at the emptiness of his account and wondering if he was simply not cut out for trading. Rebuilding begins exactly here, in the stillness of defeat. Because the mind, when wounded, demands healing before it can perform again. And healing is not an intellectual process, it is emotional. Traders often treat themselves like machines, telling themselves, just follow the rules, don't get emotional. But after a losing streak, emotion is already in control, whether acknowledged or not. Anger, shame, fear, regret, they all run silently in the background like heavy programs slowing down the system. The first step of rebuilding is not to fix your strategy, but to fix yourself. Some traders step away from the charts completely. They walk away for a day, a week, sometimes even longer. This pause is not weakness, it is wisdom. Just as an injured athlete doesn't keep sprinting on a broken leg, a trader must recognize when their mental edge is broken. Daniel, after his collapse, forced himself to take 3 days without looking at the charts. At first, the silence was unbearable. He wanted to peek, to check what the market was doing, to convince himself he hadn't missed an opportunity. But the more he sat with the discomfort, the more he realized that this urge was not about opportunity, it was about addiction. His need to be in the market had been fueling his mistakes. Once the silence became tolerable, the rebuilding began. Not with money, but with clarity. Daniel opened a journal, not a trading platform, and began to write. Page after page, he poured out his thoughts. Why he chased trades, why he doubled down after losses, why he ignored his stop loss when deep down he knew he should have honored it. The journal revealed what the charts could not, the flaws in his thinking, the cracks in his discipline, the hidden hunger that drove his recklessness. And as he wrote, something shifted. The market was no longer the enemy, his own habits were. Rebuilding from a losing streak is not glamorous. There are no triumphant wins in the beginning, no big recoveries. It is slow, steady, and sometimes painfully dull. Like a craftsman sharpening a blade, the trader returns to the fundamentals with deliberate patience. Risk management, once ignored in pursuit of quick profits, becomes sacred again. The trading plan, once treated as a suggestion, becomes law. Each trade, even if small, becomes a test not of market direction, but of personal discipline. Daniel decided that for 2 weeks, he would trade with the smallest possible lot size. His goal was not to make money, but to follow his rules flawlessly. If his strategy called for waiting until both confirmation signals aligned, he would wait. If the stop loss was hit, he would accept it without modification. Slowly, almost invisibly, his confidence began to rebuild, not in his ability to beat the market, but in his ability to control himself. That is the real foundation of trading success. A losing streak often destroys more than a balance. It destroys trust. Traders stop trusting their system, their analysis, even themselves. The market feels unpredictable, hostile, rigged. But trust is not restored in a single leap. It is rebuilt through repetition. Every small win becomes a brick. Every disciplined exit a stone. Every patient entry a beam. With enough of these, the trader constructs a new mental fortress, one stronger than before because it was built on the ruins of failure. There is also a strange beauty in losing streaks. They strip away the illusions of control and force traders to confront the truth. Nobody, no matter how skilled, can control the market. All a trader can control is their process. The market will do what it wants. It will trend when it chooses, range when it chooses, and stop out even the most flawless setups. The power lies not in predicting every move, but in aligning with probabilities and surviving the randomness. Losing streaks remind us that trading is not about certainty, but about resilience. Daniel, as he rebuilt, began to see his previous streak differently. When he was winning, he thought he was invincible. He took risks beyond his plan, ignored red flags, and convinced himself that skill alone was driving his results. But the losing streak humbled him. It revealed that his system was sound, but his discipline was fragile, and without discipline, no strategy survives. What once felt like punishment now felt like education. The market had been his harshest teacher, but it had taught him lessons no book could. The rebuilding phase also requires forgiveness. Traders are often their own worst critics. After a string of losses, they replay every mistake, every bad decision, every what-if scenario in their heads. This self-torture creates a cycle where guilt feeds hesitation, and hesitation creates more mistakes. The trader must learn to forgive themselves, not to excuse their behavior, but to accept it as part of growth. A child learning to walk stumbles many times before finding balance, and yet no one calls the child a failure. Why then should a trader expect perfection while learning a craft that is infinitely more complex? Daniel struggled with this most of all. He blamed himself, called himself names, doubted his worth. But one night, after journaling for hours, he realized something profound. The market had no memory. It did not care about his past mistakes. Every new day was a blank slate. The only one carrying the weight of yesterday was him. And if he wanted to move forward, he had to set that weight down. The rebuilding phase is long, and it tests patience more than anything else. There will be days when the trader wants to jump back in aggressively, to make up for lost time. There will be days when the temptation to overtrade feels irresistible. But rebuilding is not about speed, it is about stability. A skyscraper takes years to build, but only seconds to collapse. If the foundation is not solid, the next storm will bring it down again. In the weeks that followed, Daniel slowly began to find rhythm again. His account grew, not quickly, but steadily. More importantly, his emotions grew quieter. Wins no longer filled him with euphoria, and losses no longer crushed him. Both became information. Nothing more. The market was no longer a battlefield, it was a classroom. And he was no longer a gambler chasing redemption, but a student practicing consistency. Every trader, at some point, will face a losing streak that shakes them to their core. It is unavoidable. But those who rebuild with patience, honesty, and discipline discover something invaluable. The losing streak, was not the end of their journey, but the beginning of a stronger one. Daniel never forgot the pain of his collapse, but he also never forgot the lessons it carved into him. Whenever he felt tempted to over-leverage or chase losses, he would pause, close his eyes, and remember the silence of that dark screen staring back at him. That memory, once bitter, became his anchor. It reminded him that discipline is fragile, that resilience is everything, and that the true victory in trading is not avoiding losses, but rising from them stronger each time. The rebuilding phase is not glamorous, but it is sacred. It is where traders transform from reckless dreamers into disciplined professionals. It is where failure becomes foundation, and where scars become reminders of strength. Every losing streak is a teacher, every setback a lesson, and every rebuild a step toward mastery. And perhaps the most powerful truth of all is this: the market does not reward those who never fall. It rewards those who learn how to rise. Confidence is a strange companion in trading. When it is absent, every trade feels like a coin flip, and hesitation turns opportunity into loss. But when it grows too strong, it morphs into arrogance, and arrogance blinds traders faster than fear. After a losing streak, confidence doesn't just vanish, it shatters. Picking up those pieces without letting them cut deeper is one of the hardest challenges a trader will ever face. Picture a trader named Sarah. Before her streak, she was steady, calm, and almost surgical in her approach. Her system worked, and she trusted it. But then the streak came, sharp and unrelenting. She took a few early losses, shrugged them off, then doubled down trying to recover. When those trades failed, the panic set in. In less than a month, Sarah wasn't just down money, she was down faith in herself. The charts that once looked like opportunities now looked like traps. Every setup seemed suspicious, every signal uncertain. She didn't just lose trades, she lost her inner compass. The first trap traders fall into after this collapse is rushing to restore their old confidence. They want to feel the same certainty they once had, the same flow. But the truth is, confidence doesn't return in a flood, it returns in drops. One drop for each disciplined decision, one drop for each controlled risk, one drop for each moment when fear is resisted. Sarah had to learn that rebuilding confidence was not about proving she could win again. It was about proving she could stick to her process even when winning felt impossible. To understand confidence, imagine it like a bridge. When you first start trading, you're building that bridge with thin planks and shaky nails. Each correct trade adds strength. Each disciplined action adds stability. Over time, the bridge becomes strong enough to walk on, but a losing streak is like a fire that burns through sections of it. Suddenly, the trader is standing on half a bridge, staring at the gap, afraid to take a step forward. Many traders try to sprint across anyway, hoping momentum will carry them. Most fall. The wiser ones rebuild, plank by plank, even if it means moving slowly. Sarah decided to start again with paper trading. She knew the temptation to prove herself with real money would be overwhelming, and she didn't trust her emotions yet. So she opened a demo account, told herself she would treat it as if it were real, and began again. At first, she hated it. There was no thrill, no stakes, no adrenaline. But that was the point. It forced her to focus on execution, not emotion. Day after day, she traded her setups with small size, and day after day, she stuck to her rules. Each time she did, another drop of confidence returned. But rebuilding confidence has another danger. Arrogance sneaks back in quietly. The trader wins a few trades, feels the old rush, and suddenly believes they are back. This is the most dangerous moment. Because arrogance is not the opposite of fear. It is fear disguised as overcompensation. When Sarah strung together 4 wins in a row, she felt invincible again. She was tempted to increase her lot size, to reclaim her losses in one big push. The old habits whispered to her, "This is your chance." But she paused. She remembered the spiral that arrogance had sent her down before. And with shaking hands, she forced herself to stay disciplined. That decision, more than any win, was the real turning point. Confidence without arrogance is built on humility. It is the quiet acceptance that you can do everything right and still lose. That the market doesn't owe you anything. That probabilities, not certainties, govern the game. True confidence is not saying, "I know this trade will win." It is saying, "Even if this trade loses, I know I will be fine." The difference is subtle, but it separates amateurs from professionals. After a trader has been broken by a losing streak, one of the hardest things to accept is starting small again. There's an ego wound that comes with downsizing, with going from trading large positions and chasing big wins back to tiny trades that barely move the account. It feels like humiliation, like being knocked back to the beginning after years of progress. But this is the paradox of trading recovery. The only way forward is to strip yourself down, rebuild brick by brick, and begin again with smaller steps than you would ever like. A trader named Marcus once built his confidence around size. For him, the measure of progress was not how well he followed his strategy, but how much money he made. Every increase in lot size felt like a badge of honor. He had climbed from trading microlots to positions that could move his account thousands of dollars in a single swing. But when his losing streak hit, those positions didn't just cut into his account, they gutted it. By the time it was over, Marcus had lost more than half of his capital and nearly all of his belief in himself. When he tried to bounce back, his first instinct was to trade even bigger, reasoning that one good trade could undo weeks of losses. But it never worked. His emotions were too raw, his patience too thin, and his decision-making clouded by desperation. He would exit early when trades went in his favor, hold too long when they went against him, and ultimately bleed his account further. It wasn't until he forced himself to shrink down, to trades so small they almost felt meaningless, that he found a way to reset. This is where discipline comes in. It is one thing to know that starting small is the wise choice. It is another to actually do it when your pride is on the line. Most traders skip this step because they want redemption, not humility. They want the thrill of a big win, not the slow grind of regaining control. But skipping this step is like trying to run before you can walk again after breaking a leg. Without rebuilding the foundation, collapse is inevitable. Starting small is about more than just reducing risk. It is about retraining the mind to detach from outcomes. When Marcus began trading microlots again, he realized that the reduced size allowed him to breathe. A losing trade no longer felt like a dagger to the chest. A winning trade no longer sent adrenaline surging. The emotions that once overpowered him were muted, and in that quiet space, he could see clearly again. He began to notice patterns he had overlooked before, to respect his stops, to let profits run without panic. Slowly, his mind shifted from needing to win to needing to execute correctly. But discipline doesn't just mean trading small. It means staying small long enough to rebuild stability. Many traders treat small size as a temporary punishment, something to escape as quickly as possible. They rush back to large positions at the first sign of consistency, and inevitably, they stumble again. Marcus faced this temptation when he strung together 12 winning trades in a row with microlots. He felt the old fire ignite. Surely, he thought, this proved he was ready to scale up. But he remembered how arrogance had cost him before, and he forced himself to continue at the same size for another month. That restraint, more than the wins themselves, was what began to truly reset his psychology. There is a deeper reason why discipline matters here. Starting small again is not just about protecting the account, it is about reprogramming the brain. A losing streak wires the mind to associate trading with pain. Each loss reinforces fear, hesitation, and doubt. The brain becomes conditioned to expect disaster, and this conditioning doesn't vanish just because the streak ends. Small trades act like controlled therapy, gradually rewiring those associations. Each time Marcus executed a trade calmly, regardless of outcome, he was teaching his brain that trading didn't have to mean panic. Each time he followed his plan and stuck to his rules, he was writing new mental code. The market itself doesn't care whether you're trading small or large. The setups are the same, the probabilities unchanged. It is the trader who changes. And it is in the humility of starting small that a trader regains the space to observe, to practice, to detach from ego. Marcus eventually came to see his microlot phase not as a step backward, but as the most important phase of his career. It stripped away illusions, forced him to confront his weaknesses, and gave him the patience to build something real. There's another hidden benefit to starting small. It teaches the trader to value process over profit. When the dollar amounts barely matter, the only scoreboard left is execution. Marcus began to journal his trades with obsessive detail, not to track how much he earned, but to track how well he followed his system. He graded himself not on profits, but on discipline. Some days, his account barely moved. But he considered those days victories if he executed perfectly. That shift in perspective became the foundation for sustainable growth. Of course, discipline is not glamorous. It doesn't feel good to trade small when you know what it's like to swing larger. It doesn't feel powerful to walk away from the charts with only a tiny gain. Many traders resist this because it bruises their ego. But ego is exactly what got them into trouble in the first place. Trading small forces a trader to confront that ego, to let go of the need to prove something, to others or to themselves. Over time, Marcus did scale back up, but when he did, it was different. He didn't rush. He increased his size in small increments, testing himself not just financially but emotionally at each level. If he noticed fear creeping back, he stayed at that size longer. If he felt arrogance rising, he stepped back down. His growth was measured, intentional, patient. The irony was that by moving slower, he grew faster, because this time the foundation was solid. The lesson here is not that every trader must permanently trade small. It is that every trader must be willing to swallow their pride and reset with humility when the market humbles them. Discipline is not about restriction. It is about freedom. The freedom to trade without fear, without recklessness, without the baggage of past mistakes. Starting small is simply the tool that makes that freedom possible. In the end, Marcus didn't just recover from his losing streak. He became a different kind of trader. He no longer measured success by size, but by consistency. He no longer chased redemption, but trusted the process. And most importantly, he no longer feared starting small, because he knew that greatness is always built on small, disciplined steps. The market will always test discipline. It will tempt you with shortcuts, lure you with quick wins, and mock you with the illusion of control. But the trader who can set aside pride, embrace humility, and begin again with discipline will always outlast the one who chases glory. Because in trading, survival is the ultimate edge. And survival begins with the discipline to start small again. The greatest test of a trader is not how high they can climb during winning streaks, but how they rise when the ground has already collapsed beneath their feet. A losing streak feels like falling into an endless pit, where every attempt to claw your way back out only makes the walls crumble more. But within that very darkness lies the chance to build the type of resilience no winning streak could ever teach. Think back to the stories of legends in finance, business, or sports. Every one of them endured a season of relentless losses. Jesse Livermore, one of the most famous traders of the early 20th century, went bankrupt multiple times, completely wiped out, before he earned his fortune again. Michael Jordan, often considered the greatest basketball player of all time, missed more shots than most players will ever take. The people we admire didn't avoid losing streaks. They endured them, survived them, and came out stronger than before. The truth is, if you've survived a losing streak, you are already stronger than you realize. You've been tested in ways many traders never are. You've faced not only the market but yourself. The doubts, the fear, the temptation to give up, the nights staring at the ceiling wondering if you're cut out for this, and yet, you're still here. That alone is proof that resilience is already a part of you. The question now is, what do you do with it? To rise stronger, you must first rewrite the story of your losses. Instead of saying, I failed, say, I learned. Instead of labeling it as the end of your journey, reframe it as the chapter that made you unshakable. Every loss carried information, a lesson, and a chance to sharpen your edge. A losing streak doesn't mean the market is against you, it means it is shaping you, chiseling away the parts of you that can't handle the pressure. So what remains is only strength. This is why casinos always win in the long run. They don't fear a bad night when gamblers hit big. They don't crumble when they pay out millions in winnings, because they know their edge will eventually prevail. They think long term. You must adopt the same mindset. A losing streak is simply the short-term variance of the game. It doesn't erase your edge unless you abandon it. Rising stronger requires balance. Don't swing wildly in the other direction, trying to avenge every loss with reckless trades. Don't punish yourself with perfectionism, trying to engineer a flawless system that can never fail. Accept that losing streaks are not an interruption of trading, they are part of trading. Just as rain is part of farming, just as failure is part of building. You cannot eliminate them, but you can prepare for them, endure them, and outlast them. One of the most powerful ways to reset after a losing streak is to reconnect with why you started trading in the first place. Was it for freedom? For mastery? For the love of solving puzzles no one else can solve? That original spark matters, because losing streaks dim the fire. They make you forget why you're here. Take time to write it down, revisit your vision, and remind yourself of the bigger picture. You are not in this for one trade, 1 week, or even 1 month. You are in this for the long game. And the long game is never decided by a losing streak. History is full of proof. In 1998, hedge funds were collapsing after the Russian debt default. One of the most famous, long-term capital management, was so deep in losses it nearly brought down the financial system. Yet, the traders and investors who survived that period went on to build empires. They learned from the fire and carried those lessons into decades of resilience. The same can be true for you. This streak is not the end, it's the initiation. The real turning point comes when you stop identifying with your losses. You are not your losing streak. You are not the red numbers on your screen. You are not the account balance that dipped lower than you wanted. You are the person who can recover, reset, and rebuild. Once you separate your identity from your outcomes, you'll find freedom. You'll no longer trade to prove your worth. You'll trade to express your discipline, your edge, your vision. And that's when your results begin to change. There's something else losing streaks give you: empathy. The ability to understand what other traders feel when they go through their own storms. This makes you wiser, more grounded, and more capable of mentoring others someday. Pain becomes perspective, and perspective becomes power. But here's the most important truth. You must not let survival be the only goal. Don't just aim to recover to where you were before. Aim to rise stronger. If you were reckless before, let this streak teach you discipline. If you were impatient before, let this streak teach you patience. If you were overconfident before, let this streak teach you humility. Every collapse is an invitation to rebuild differently. It's like the Japanese art of kintsugi, where broken pottery is repaired with gold. The cracks are not hidden, they are celebrated, transformed into part of the object's beauty. Your losing streak is the crack in your story. But how you fill it, whether with regret or with wisdom, is your choice. Imagine yourself walking into the future, carrying those golden scars as proof that you endured what others could not. Picture the moment when you finally break the streak. That first winning trade after weeks of struggle. The rush of relief, yes, but more importantly, the quiet confidence that says, I can come back from anything. That moment is not luck. It's not chance. It's the result of every hard night you endured, every journal entry you wrote, every temptation you resisted, every morning you showed up anyway. That moment is earned, and once you've tasted it, you will never doubt your resilience again. So here's the final reset. Stop running from losing streaks. Welcome them as part of your evolution. Let them strip away what is weak, and let them reveal what is strong. Let them forge you into the kind of trader who doesn't just win, but endures, survives, and thrives. Because in the end, the traders who succeed are not the ones who never fall. They are the ones who rise stronger every single time. And when you do rise, you'll realize something extraordinary. The losing streak that once felt like the end of your world was actually the beginning of your transformation. It was the silence before the breakthrough, the pressure before the diamond, the storm before the calm. You are not just recovering, you are becoming unshakable. This is the mental reset. This is resilience. This is you rising stronger than ever before.